Hi friends, this is Sai Akash, a practicing chartered accountant from Hubli. Many times we get this common question, Sir, I want to start a new business. How should I do it? Should I incorporate a private limited? Should I go ahead with a LLP? Or should I incorporate a partnership firm? Or should I continue as a sole proprietor? Watch this video till the end and you'll have all your answers sorted, so that you can take an informed decision as to which kind of business entity suits your needs the best. To start with, let us start proprietorship. So what do you mean by sole proprietorship? You are the single owner. You will get your business incorporated in your own name, your own PAN number. And whenever you go and apply for GST, the GST certificate also will be attached to your own personal PAN. And as far as the taxation is concerned, again individual slab rates up to 12 lakh you will get no tax. And if the income is more than 12 lakh up to 24 lakh, you have a slab of 5, 10, 15, 20, 25, 30. And this is the slab rate that is applicable. The highest tax rate as a sole proprietor that you have to pay is 39%. If your total income is in excess of 5 crore, the effective tax rate is 39%, my friends. But what is the disadvantage of doing business as a sole proprietor? Well, the first disadvantage is there is no separate distinction between you and your business. Why? Because the legal name of your business will still be you, only the trade name will change. The PAN number will be yours, the GST number will be attached to your own PAN. Again, your savings account will also be considered and your current account will also be considered. So, what we generally suggest is never take GST number with your personal PAN. The reason we are saying this is we should always keep your business separate, your personal things separate. Whenever a notice comes from the GST department or from the income tax department, if you are a sole proprietor, the authorities will ask you for all the bank statements. That is your savings account also, that is your personal savings personal account also, as well as your current account also, because the business is in your own individual name. In that case, what will happen, sir? All your personal receipts which would otherwise not be taxable, the officer may come and say, boss, in reality what will happen? The officer will just compare all the credits from all your bank accounts and he'll say that is your GST turnover. And one more disadvantage of sole proprietorship is whenever there is a litigation, whenever something goes wrong, suppose your customer or your vendor or maybe some other authority send you any notices or there is a legal case going against you, then in that case your personal assets, whatever are your personal immovable property, personal investment, personal FDs will also be taken up in order to meet the liabilities of the third persons. So for a sole proprietor, we generally don't consider as a good option. Keeping this aside, next comes three options: partnership firm, limited liability and private limited company. Let us compare one by one. To start with, what do you mean by a partnership firm? So partnership firm is governed by Indian Partnership Act 1932 and registration of partnership is not necessary. What are the advantages of taking a partnership firm? See, when you incorporate a partnership firm, then you will get a separate PAN number. So you will be different, your PAN number of the firm will be different, and whenever you take GST number, the GST number will be in the name of the firm itself. And since registration is not mandatory, it is your choice. Either you can go and get yourself a registration for partnership or it is not required. And what is the tax rate, sir? For partnership firm, the tax rate is 31.2%. Effectively, the tax rate is 31.2%. And if your turnover crosses a certain limit, your profit crosses a separate certain limit, in that case, the maximum tax rate that you should pay as a partnership firm is around 35%. Yes, my friends, 35%. Again, what is the disadvantage of unregistered partnership firm is whenever you want to put a case against someone. Now, in the first scenario, we discussed somebody else is coming and putting a case against you. But in this case, you want to put a case against someone, you want to file a suit against someone. Again, since you are unregistered, you cannot do it in the firm's name. Again, your personal assets will be liable. First of all, you cannot put a case against anyone. Second thing is when somebody puts a case against a company, against your business, again, all your personal assets, all your personal liabilities will be attached to that particular litigation. So there is no separate entities. There is no separate legal distinction between your firm and you. And one more disadvantage of choosing an unregistered partnership firm is that again you are paying 31.2% taxes. That's the first one. The other reason is there is no perpetual succession. In that, what do you mean by perpetual succession? So if you are doing in the form of a proprietorship or in the partnership firm, whenever you die or whenever something goes wrong, whenever a partner exits or another partner comes in, then for a reconstitution, the permanent, whatever you call the permanent business will not be continued. That is one of the disadvantages of proprietorship firm as well as partnership firm. Now I'll just keep LLP aside and we'll discuss private limited company. The most structured form of running any business is in the form of a company. I repeat, the most structured form of running any business is in the form of a company. Why do I say so? The first advantage of having a company is that it is a separate legal entity, not just a separate tax entity as well as separate legal entity. What do you mean by separate legal entity, sir? When I say separate legal entity, the company will have its own PAN number, own GST number, own TAN number, everything. And somebody puts a case against you, they will file the case only against the company and not against you. And you want to make a case to somebody, then you can do it in the name of the company, not in your individual name. Second most advantage of the private limited is there is a limited liability. So what do you mean by limited liability, sir? Suppose you start a company with 10 lakhs of capital and somebody puts a case for say 50 lakhs. In that case, the maximum liability that goes from your pocket is only 10 lakhs and not 15 lakhs. No doubt your personal assets may be worth 5 crore, but nobody come and touch your personal assets, where in case of a company. Next advantage of a private limited company or a company is that the tax rate. Effectively, irrespective of any of your income or turnover limits, the tax rate that is applicable for a private limited is only 25.168%. I repeat, 25.168% is the effective tax rate for company. In the firm, you are paying minimum 31.2, maximum 35. And in case of a proprietorship, you are paying minimum the slab rates and the maximum it can go up to 39%. Again, without the advantage of what? Without the advantage of separate legal entity and perpetual succession. And if you die or you want to pass on this legacy of your business to your children, in that case, if it is a private limited, the shares will get easily transferred. There is no change in PAN, there is no change in TAN, there is no change in PFESI, nothing. Understood? So private limited is the most structured form of doing any business. Now in between there is something called liability, limited liability partnership. So there is an unregistered firm, there is a private limited. In between there is something called limited liability partnership, which has features of both the partnership firm also and the private limited also. Then how is LLP a good thing to do? How is LLP better than partnership firm? I'll tell you, LLP is better than partnership firm because LLP comes with limited liability. In that case, whenever something goes wrong, your personal assets are not at risk. But how it is not as good as private limited? Because under private limited, you are paying only 25.168% tax. Whereas if you go for a limited liability partnership, the tax rate is as applicable for a partnership firm, which is nothing but minimum 31.2% and maximum it can be 35%. Again, so this is a LLP. So normally we don't prefer proprietorships, we don't even prefer LLPs. Why? Because LLP has the compliance of a private limited, more or less, but the tax rate is of a partnership firm. So here you are incurring compliance cost also, you are paying higher tax also. And one more disadvantage of LLP as compared to a normal partnership firm is that for a partnership firm there is something called presumptive taxation, wherein for a resident partnership firm, even though it is unregistered, you can take the benefit of presumptive taxation, that is your 4480 under the Old Income Tax Act. Now for an LLP, that benefit is also not available. So in short, LLP is not a good option. So we are left with only two options, either an unregistered partnership firm or a private limited company. Now let me compare the cost. From the setup cost, private limited is a very expensive thing. Incorporating and maintaining a private limited company is the costliest affair. Why? Because you are regulated by the Ministry of Corporate Affairs, MCA. Your company gets registered under the MCA portal, and for that incorporation you need to approach a qualified company secretary or a chartered accountant to get your company incorporated. And after the incorporation also, irrespective of your business, if you may run your business, you may not run your business. In both the cases, for a private limited, compulsory audit every year. You have to get your books of accounts audited every year, you have to file your ITR every year, and you have to do ROC filings every year, even though the company has zero turnover. So incorporation as well as maintenance of a private limited is costly. Then something lesser than that is LLP. Under LLP, there is no mandatory audit. Even though there are 2 annual compliances that are mandatory, audit is not mandatory for LLPs unless your turnover crosses 40 lakhs. So up to 40 lakhs, LLP no audit, only ROC compliances, but the tax rate is 31.2. Coming to unregistered partnership firm. Unregistered partnership firm, audit will be only under the income tax law, no other audits. So if you go for a private limited, there is statutory audit under the Companies Act. If you breach the turnover given in the income tax, then 2 audits. Audit under this one also, Companies Act also, audit under income tax law also. Again for LLP, if you breach the turnover, audit under LLP Act, statutory audit, plus audit under Income Tax Act. But for unregistered firm, there is only one audit that is applicable, that is audit under Income Tax Act. That is when you breach a certain level of turnover as given in the Income Tax Act. Again, proprietorship, we have kept it aside. We have totally removed proprietorship as a form of business. Now, another thing which we need to consider is, sir, why private limited? I will tell you why private limited, because private limited carries credibility. So when the moment you incorporate a private limited, entire data of your business is publicly listed in the ROC website, in the Ministry of Corporate Affairs website, and you are being regulated at the time of incorporation. You are being regulated. Once the company is incorporated on an annual basis, auditor will come to you. You have to reach your auditor, get your accounts certified, and the audit report will again get filed with the ROC. So the other person who is doing business with you can trust you more, because you are publicly available, you are governed, you are regulated on a regular basis, you are being tested. But if you go with a unregistered partnership firm or a proprietorship, nobody can get to know what you are. Correct? So this is the advantage. Private limited brings credibility. Private limited has lesser tax rate, but private limited comes with the compliance cost. Now, once you choose a form of entity, may it be proprietorship, partnership firm, LLP, or a private limited. Now, after incorporation, there are certain compliances, right? You have to go for PF, ESI, you have to take GST registration. If you are doing import-export, IEC, AD code registration, all those things. Or if you are into food business, FSSAI. Yes? So, all those compliances, once your form of entity is chosen, all other compliances, your GST, your PF, your ESI, your FSSI, your import-export, anything, any other compliance will remain same. All other compliances will remain same, even though it is a partnership, even though it is a LLP, even though it is a private limited. If you are doing import-export, IEC mandatory. If you are crossing GST turnover limit, then GST registration mandatory. So, if you are doing food business, FSSI is mandatory. Only the form of business will impact at two stages, incorporation stage and annual compliance. But why private limited is better? Many people who come to you, many clients will have that perception, sir, हम अभी बिजनेस चालू कर रहे हैं, हम प्रोप्राइटरशिप से कर लेते या पार्टनरशिप फर्म बना के कर लेते, आगे जाके हम प्राइवेट लिमिटेड में कन्वर्ट करेंगे. आई विल टेल यू फ्रेंड्स, नेवर मेक दिस मिस्टेक व्हाइल डूइंग स्टार्टिंग योर बिजनेस. आई विल टेल यू सिंपल रीजन. Under the Indian law, what happens is, once you start a business entity, say for example as a partnership firm, then you get a PAN number, you get a GST number, you get a TAN number, you get a PF number, you get a ESI number, you get a current account number, you get a IEC, correct? And you run your business say for 1 year, 2 years, 3 years. And after 3 years, you think of shifting to a private limited. Then you incorporate a private limited. That is okay. After incorporation, say after 3 years, you want funding needs. Then you have to raise money, say from bank. In that case, banker will ask for a 3 years audited financial statements, 3 years ITR, 3 years GST return of the private limited, not of your partnership firm. Why? Because your private limited is a different entity, your partnership firm is a different entity, and your private limited got incorporated just 2 days before. Banker will not consider your partnership firm. So, whenever you are choosing your business organization, don't think it from what will happen for me in the next 1 or 2 years. So think from 3 years down the line, 5 years down the line, 10 years down the line, 15 years down the line. If you are very sure that you will be doing business, this is your full-time venture, this is your bread and butter, in that case, incorporate a private limited today itself. Don't go for any other type of entities and then convert, because it will come at double cost. I'll tell you why. Because at the time of partnership firm also you have to pay for GST, you have to pay for PFSI, you have to pay for everything, correct? And once you convert, again you have to pay double. And the advantage, it is not there. Again, one more aspect which I want to discuss particularly is with regards to getting external funding. So if you want to get angel investments, if you want to get grants, if you want to get Startup India registration, or if you want to get any venture capital coming in, or if you want to go to the next level and you want to go for a SME IPO or a main board IPO, yes, if you want to get your company listed, in that case, the one and only form of entity which will help you is private limited. With partnership firm, with proprietorship, with the unregistered partnership firm, you cannot get external funding. You cannot go and list yourself on the recognized stock exchange. You cannot give ESOP to your employees from your LLP, from your partnership firm. Yes, so if growth and funding both are your targets in the longer run, don't think about today, next 1 or 2 years. Initially, any business, including our own practice, is loss making. But think about 5 years, 10 years, 15 years down the line where you want your company to be. And based on that decision, you take a call whether you want to go for a private limited or you want to continue with unregistered forms of business. Tax whatever is one aspect of it, but apart from tax, the credibility that the other person looks at you when you have a private limited is different. Yes, so proprietorship we have kept it totally aside, and LLP we have kept it totally aside. Either we'll do partnership firm, unregistered partnership firm, or a private limited. One more aspect I would like to discuss upon is there is something called drawing the money from the company. So if you are running a business and you withdraw money from your business, and when you do that under the LLP or the partnership firm, to a certain extent it is taxable in the hands of the partner, or in certain cases it is not. My suggestion would be in private limited also you can draw salary, you can draw director remuneration. And one more advantage of a private limited is whatever assets you want to generate. Say suppose you want to get a own office building, get a factory, get machineries, you can get them built in the name of the company. So the assets can be in the name of the company itself, need not be in a personal name. And one more disadvantage of converting from a partnership or a proprietorship to a private limited after 3 or 4 years is that your brand name, your goodwill, your patent, your trademarks, your copyright, your domain name, everything will be registered in the name of a partnership firm and not in the name of a private limited company. And also if you are dealing with bigger companies, the vendor code that you get, the vendor code will be in the name of a partnership firm or a proprietorship. That also you need to change. So that changing process is more complicated, more expensive. So if you want to do a business which for a longer period of time, and which you are very sure by hook or by crook you will be into business and you will be doing this business for a longer period of time, get a company incorporated today, don't wait. And other things that I would like to discuss is that with respect to the compliance burden, right? So if you do in a partnership firm or a LLP or a private limited, minimum 31.2%, and irrespective of your profit, for a private limited it is only 25.168. So you are saving tax here, income tax around 6 to 7%, and your compliance cost will not be 6 to 7% of that income tax which you are saving. It will be less than that. Understood? So whatever is annual compliance cost that we are talking about in terms of audit, in terms of ROC filings, the benefit that you get from a private limited is way more than the compliance cost that you have to bear, because as you grow, your profit grows, compliance cost will not be a problem. It will only be a problem for the setup, for the initial incorporation and 1 or 2 years of your incorporation. Post that, when you grow, you will not be having any problem in meeting the compliance cost. So before taking any decision, consult a qualified professional, think about all the aspects. I have only discussed the common queries that a client will have. If you have any specific set of queries with this regards, just ping me your contact number, and I have shared my contact number in the description. You can get in touch with us and we will try to guide you about the best business organization for your needs. For more information, keep the channel subscribed. Signing off, this is CA Sai Akash from Hubli. Great day. Bye.